what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and Cardano analysis video. I'm sure you guys already sniffed that one out. Yes, I got a very bad sore throat, so I'm going to be sounding a bit hoarse and a bit off tune today. So, however, today I don't want to take a break because I feel like there's much ground to cover. I think there's been a bit more FUD that's poured into this space, and I feel like that too is coming to a culmination of sorts. So I want to be going over that. Now, that is primarily based off of the whole Genesis and Gemini feud that's happening right now. I'm going to call it a feud because there has been no resolution as of yet. Okay, so we'll be going over that drama today because it's important that you guys have a 360 view on what's going on and what could really affect the markets when it comes to, all of that FUD really spilling on over to price action. All right, so we'll be talking about that first, and then we'll be moving on over to Bitcoin, and then at the end of the video, I'll be covering Cardano. I'll be including timestamps below for those of you who just want to cut to the chase, of course. Now, it goes without saying, you guys already know the drill, the whole like and subscribe, blah, 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 blah. But I just want to let you guys know that people say that because it does go a long way for the channel. YouTube recognizes that, and they push the videos out a bit more. However, I do respect your decision if you wish to wait until the end of the video to see if you get any value from this whatsoever. Okay, now, before we also jump in, another thing I wanted to mention is that yesterday Sean actually did a video on Bitcoin, but he focuses primarily on education, especially on that Ichimoku cloud. So for those of you really looking to learn more about trading and trading with indicators, I suggest going ahead and checking out that video because your mind is just going to be blown with that very simple explainer of the Ichimoku cloud. I cannot stress enough. Now, this is just, I'm going to go on a bit of a rant here, but I cannot stress enough how much your education matters in these phases of the market. Education is everything on the lows because trust me, I've been through this. I've been trying to learn during markup phases and consolidation phases. Everyone is too damn excited here. There's just way too much excitement. You're not going to be able to learn anything on there. Okay, so if you really want your education to pay dividends, I really suggest taking time out during these phases of the market, and they come in, once every 4 years. Take out time to learn during these phases because trust me, they're going to pay dividends. So Sean did an excellent video yesterday, so for those of you really looking to learn more on the Ichimoku indicator, which is one of our foundational indicators here at Mango, go ahead and check that video out. I will be linking it at the end of this one. Alrighty, so with that, we can jump on over to, the first point in today's agenda, which is the FUD, right, between Genesis and Gemini. Now, I start off my morning with this tweet, Kate Clark. Scoop, she says, Genesis parent company, DCG, just shut down its $3.5 billion wealth management division as the crypto contagion continues. Now, this came out on Jan 6th, okay, so yes, earlier today for me. So for those of you who are unaware of what this is all about, what's this feud between Barry Silbert and Gemini, let me break this one down for you, okay. I have I'm going to do a little drawing for you guys. So Barry Silbert, we're just going to name him BS. It's kind of funny, ironic. Okay, Barry Silbert is the CEO of the parent company, which is DCG. Okay, so we're going to put them into one little circle right here. Genesis is a subsidiary of DCG. Okay, what is Genesis? So Genesis, the company, is a crypto lending company. Okay, so they're a lending company. That is their main operation. Lending. Okay, now we have Gemini on the other hand. Okay, now this is that third party that has conflict with DCG and Barry Silbert. Now Gemini is also owned by the Winklevoss twins. Now Gemini had a product called Earn. Okay, Gemini Earn. Now, Gemini Earn was much like BlockFi. Just to break it down for you, Gemini Earn was much like BlockFi, where they allowed users to take their cryptocurrency, put it into this product called Earn, and what they'd get is just interest in return. However, it was not something that Gemini was controlling. All the crypto that was deposited into Earn was being lent to Genesis. Okay, and Genesis was paying them interest. Now, on Gemini Earn's landing page, there was this little paragraph right here that says, Gemini partners with accredited third-party borrowers like Genesis, who are vetted through a risk management framework and reviews our partners' collateralization management process. Additionally, on a periodic basis, we analyze our partners' cash flow, balance sheet, and financial statements to ensure the appropriate risk ratios and healthy financial conditions of our partners. But now let me tell you something, guys. When there is systemic risk, okay, when there's systemic risk, when things implode together, all of these guarantees that you see on landing pages go out the window very, very fast. I don't care how legit they look. It all goes out the window when systemic risk hits them. All right. So now what's happened here is that all of the deposits, all of Gemini's customers who deposited into this earn product, all of their withdrawals have been halted, primarily because of Genesis. All of that money was lent to Genesis. Now, recently, and I'm talking about a couple of days ago, the Winklevoss twins came out with this open letter to Barry Silbert. Remember, Barry Silbert is the CEO of the parent company DCG that owns Genesis. Okay? They're like, today marks 47 days since Genesis halted withdrawals. Altogether, our customers entrusted more than $900 million of their assets to you. However, it is now becoming clear that you have been engaging in bad faith stall tactics. On December 2nd, we expressed our belief that getting everyone in a room together as soon as possible will be the most productive path towards reaching a resolution. You continue to refuse to agree to a timeline with key milestones. And it's not lost on us that you have been working desperately to try and firewall DCG from the problems that you created at Genesis. So this was a very, very heavy open letter to Barry Silbert. So now this letter is out there on Cameron Winklevoss's Twitter page for you guys to see. Of course, I'm just like sort of paraphrasing all the important lines in here. But anyways, this was a very heavy letter to Barry Silbert, basically insinuating that he is acting such that he does not intend to actually return the money back that they owe to Gemini's customers, okay, who actually deposited into Earn. And what do you know, guys? Right after this open letter was published, a couple of days later, today, Genesis parent company, DCG, just shut down its $3.5 billion wealth management division. So now rumor has it that they might be filing for bankruptcy. However, that is not confirmed just yet. So now the question is, does that actually cause additional systemic risk? And do we see that actually cascade on over to the charts? I do believe that price action has a very, very good habit of sniffing out any weakness in the market. So this we can actually move on over to Bitcoin, but I figured I'd give you the rundown on the drama there. But yeah, if there's any weakness on the chart, it's going to show itself on your lower time frame. So far, this candle is looking rather freaking weak on your 4-hour time frame. This looks like an M-like formation ready to break down. However, I noticed something on the Mango dashboard that I want to bring to your attention. You can find the dashboard at app.mangoresearch.co, but Bitcoin USDT on your 4-hour time frame, yeah, while it is long, volatility is sitting at 0. The thing about the dashboard, guys, is that it is a trend indicator, right? Now, you want to be using it in conjunction with your TA, of course, but when volatility is flashing 0, it becomes even more imperative that you look at the chart. Okay, because for trends to actually be established, you also need a certain level of volatility. When there's no volatility on the chart, the trend really doesn't matter because there's likely no trend just established just yet. What this is really telling you is that the trend is building, but we need an additional sort of oomph of volatility for it to actually come alive. But what really caught my eye on this dashboard, on this card right here, is the flag that just went off. It says potential bullish divergence. So with that, we can get on over to the charts to see if there is potential bullish divergence, because that sort of goes against the entire backdrop of the FUD that we're seeing right now, right? So if I go ahead, put on my oscillators, I just want to cover this with you guys to see if it has confirmed itself. And for those of you who do not see it, the divergence is this right here, okay? Let me just bring up my arrows for you guys. Okay, this is the divergence. So we have higher lows on price action and we have lower lows on RSI, and that's it. Okay, at what point does this confirm itself? Well, first of all, it needs to first take out the previous candle body high. And also, it needs to sort of, the lowest point of the candle needs to be higher than the lowest point of the previous candle. So if there's any candle that can really confirm the bullish divergence, it's going to be the next 4-hour candle, which we begin in around half an hour. Okay, so we'll be keeping our eye on that candle, but so far this bullish divergence has not triggered just yet. At what point does the bullish divergence get negated altogether? Well, keep that simple. As soon as we take out this wick low right here, the bullish divergence gets negated. Okay, and in fact, as soon as we take out that wick low right there, we actually we activate a bearish pattern. Okay. which is actually, no, even before that wick, but I'll be waiting on the wick to really confirm that bearish pattern. But this is it. It's like an M-like formation. If we do break down, as you can see, I already have the measured move marked out on my chart, but the measured move will take us down to around $16,660. A very, very symmetrical number. However, now let's talk about the bigger picture here, because if we're looking at additional risk really pouring onto the chart, we want to see how immense it can get if it does hit the charts, right? So that can be found primarily on your weekly time frame in terms of, there's real critical numbers to be watching out for. So I'm going to get rid of any lines I do not need. So as far as the macro picture is concerned, we're still looking at the same range of price action. In my previous videos, we've been drawing out a picture for Bitcoin, right? Where Bitcoin is still very much within its range from around 17.2K, going all the way down to $15,850. Now, my last video, I went ahead and drew out a midpoint for you guys, right, which was this right here. The midpoint of the current range comes in at around 16,525. I'm only going to be looking for additional downside from Bitcoin once we really take out that midpoint. So I want to see a candle close, at the very least a 2-day candle close underneath the midpoint to really anticipate another flush down to around these lows right here from the first week of November. Okay, this will likely take us all the way down to $15,850. I will only be looking for further downside from Bitcoin once we break 15.8K. Keep it very, very simple for yourself as far as downside is concerned, guys. It does not have to be complicated. What is the target to the downside I'm looking at? That has not changed either. I'm looking at 13.2K as my next target. I do believe it is going to be a volatile range, and that can be that is abundantly clear just by looking at the volatility that Bitcoin actually stepped into on our markup phase in the last bull market, right? Just look at this entire range right here. This was a very, very volatile range for Bitcoin, so I will be expecting the volatility to kick in there as well. As far as the bullish narrative is concerned for Bitcoin's price action, we've been building a story for that, which starts off on the daily time frame. I've been looking at this cup and handle like formation. Okay, now I want to see a bit of continuation on the handle side of the formation. Now, we mentioned that, hey, it's going to take Bitcoin breaking the midpoint right here, which comes in around 17.2K before we anticipate further upside. As far as the midpoint is concerned, if I'm being very honest with you guys, I want to see a weekly close over the midpoint. The weekly has had significant resistance at around 17.2K. So taking it out on the weekly close is going to be very, very important for the Bitcoin bulls. Okay, so I'll be looking for a weekly close over 17.2K before I look for any further upside on the intraday as well as intra-week time frame. So I'm talking about the hourly charts as well as the daily charts, okay? Now, the two most critical levels on the chart, of course, is going to be 17.2K, which we just went over, as well as 18.7K. The significance of 18.7K has built up over time, and that is because of this. We have been looking at one of our cornerstone indicators to really help us assess whether or not the bear market has begun or the bull market has begun, right? And that is the mango dynamic indicator. Now, Sean and I usually like playing this on the 4-day time frame, but first off, I want you to notice where dynamic resistance is really coming in at. It's currently coming in at 18.4K, which is less than the top of the range resistance at 18.7K. If I just zoom out of this picture, just to drive in the significance of the dynamic indicator, notice how the break of the dynamic indicator was the very beginning of the bear market. In the last bull market, every touch of the 4-day dynamic was met with support, price bounced off of it, and we rallied to the upside. It was the first break that gave people the hint that, hey, perhaps the music is about to stop playing. It is time you start thinking of your contingencies. So now this was the bear market where every touch of the 4-day dynamic was met with resistance. What's happening right now is that the dynamic has come into this area of equilibrium, in that if we start taking out 18.7K, we would have officially cleared the 4-day mango dynamic indicator, at which point, guys, I will be knocking off my bid at 13K. I do have a running bid at 13K. I will be taking that out as soon as we start living over 18.7K. Keeping it very, very simple for myself. Okay, that is going to be the key level that I want you guys to have your eyes peeled on, because that's essentially what's going to cause those bullish cascading effects to the upside. That is going to get volatile, and you do not want to be caught on the wrong side of that trade if you're someone still shorting Bitcoin. All right, so now this is the Bitcoin update. Volatility is still pretty low, and that's why I'm not looking to take any leverage positions on here. So now with this, we can move on over to Cardano. Believe it or not, I was actually going to do BNB because BNB's heading into a burn. However, Sean called, he's like, perhaps you should be looking at Cardano. I think Cardano is doing something interesting. So technically, we are going to be dissecting this chart together, you and I. Cool beans. So with that, let's first start off with the Mango dashboard to see if the dashboard is giving us anything on Cardano. By the way, guys, the dashboard can be found on app.mangoresearch.co. There's a free version that you guys can play around with. So on the 12-hour, let's start with the 4-hour. The 4-hour time frame right now, Cardano USDT is bullish, okay? Long bullish signal that went off 2 days ago. If you caught a trade on that, you're up by a good 2% on that trade. How about the 12-hour time frame? Nice. Wow. Cardano USDT on the 12-hour time frame gave us a long signal 3 days ago. If you caught a trade on that, you're up by a good 7% volatility, flashing 69, telling us that, hey, the bulls might still have a bit more oomph in them. How about the daily? Okay, daily is still neutral, telling us that the bullish long trend signals on your lower time frames, that trend has not yet cascaded on over to your higher time frames just yet. So with this, now that we're on the chart, I'm going to switch off everything. I'm going to basically go through my drill with you guys on how I really like dissecting charts, okay? So that way you guys can learn something today. So I first start off with my horizontals. I go and look at all the key levels that I'm looking at in terms of support and resistance regions. Let's turn that to a yellow. So we have resistance, key resistance at around 39 cents. We got a region of support at around this region right here. So this is around 25 cents. Okay, nice, respected. Cool. And now when I highlight the zone, the key region of support and resistance that price is currently within, I then go ahead and mark out a midpoint. Okay, so now we have a mid that comes in right around here. Does that line up with anything? And it does. Nice. Okay, so we're seeing confluence right there. Okay, so this is a good picture. Now, from where price is at right now, what we're trying to establish here is from where price is at right now to the midpoint, can we actually see a rally? Because, wow, that's going to be a good 15% to the upside, guys, 15%. Okay, now for that, let's first get on over to the daily time frame. Because Sean said he spotted something out in terms of a potential W-like formation. Okay, see what he's seeing here. So we can actually draw out a line segment right here. Okay, so we had resistance on your daily time frame that came in at around 26 cents. And notice, however, since we broke that back in 16th of September, every attempt to reclaim that level at 26 cents was met with resistance on every attempt. Right, so now this is the first time since then that we've actually managed to take it out. Now, question is, are we up against resistance, or can we actually see that further move to the upside? So right off the bat, before I actually put on any indicator on this chart, I am seeing a pattern, okay, which is this. It's more like an inverted triangle / megaphone pattern. Now, usually in downtrends, when you see patterns like this in downtrends, probabilistically, they do break up. So when you see patterns like this to the downside, you'll usually see on the break to the upside, you actually see a breakup of that pattern. So they end up being bullish patterns when found in bearish drives. Okay, so now we've seen this pattern actually break out. Question is, do we see continuation and when? So far as the cloud is concerned, the cloud is red, price is underneath the cloud, and we have a bearish TK cross, which is still bearish. Okay, so however, with that being said, notice price against the 21 EMA, 10KIN, and 10 SMA. We've cleared all 3 regions out, and that is actually pretty strong because notice ever since this breakdown right here, once again, wow, this came in on 7th of November. We took out the 21 EMA to the downside, and then after that, every attempt at reclaiming the 21 EMA and the 10KIN was rejected. Okay, so this is information for us. Okay, rejected. This is the first time since then we've actually managed to take it out. Now, question is, do we see continuation? So right now, daily time frame is not showing any resistance as far as cloud levels are concerned. Let's go ahead and put on our mango ribbon. See what the ribbon is up to there. And even the 55 is way above us. Okay, 29 cents. Alrighty, let's also go ahead and take the measured move of this pattern play that we found, right? Where does that take us up to? Yeah, around that 55-cent region, around these wick lows right here as well. This is a good 30 cents on the dot. Okay, so we actually have a range of resistance overhead. We have the measured move, wick lows, and our horizontal, our midpoint, our weekly midpoint right there. That's going to be the range. And still, guys, this is going to be a rather decent trade setup to be had. So right now, the trade setup that I'm seeing directly in front of my face is a trade at the 21 EMA, because it's just going to be that much more easier to manage your trade. Because not only is it marking the neckline of the formation, it also is the 21 EMA. And also, let's go ahead and turn on the Mango Dynamic Indicator. And what do you know? We also have dynamic support at that region. So it's going to be very, very easy to manage your trade off of that, okay? So that would be the potential trade setup right there. Allow me to just draw this one out for you. So it's about bidding the support right here, okay, and looking for the rally to the upside, looking for continuation on this trend that Cardano is trying to establish. However, you know when you're wrong on the trade. Remember, when it comes to setting up your trades, it's about really understanding your invalidation point. Your invalidation point happens as soon as we close a daily candle underneath this level. Okay, this level comes in at around 26 cents. We start closing daily candles underneath that region. You are invalidated on your trade, period, done. That is your signal in that, okay, you have been invalidated on your thesis. It's time to reevaluate and reposition. Okay, keep it very, very simple for yourself. The trade setup is going to be bid the bottom of the dynamic, coming in at around 26 cents. And the target to the upside is going to be this region right here from 30 cents, going all the way up to 31 cents. Okay, from the bid opportunity to overhead resistance, that's going to be a good either 12 to 15% to the upside for you. So let's also go ahead on over to some of our lower time frames. 4-hour time frame, anything here? Okay, nice, beautiful, established trend on the 4-hour time frame. How about let's put on the ribbon? Anything on the ribbon? Okay, we have resistance, finally. Okay, now this makes sense now suddenly, right? So we have the 200 simple moving average on the 4-hour time frame and the 200 EMA sweeping in right above Cardano as we speak. When was the last time we took out these two regions? Was right here, once again, October 29th. So for me to anticipate the next rally to the upside, I'll be looking for price to take out these two regions right here, okay? The 200 simple moving average coming in at around 27 cents. Look for candle close, guys. I cannot stress this enough. Now, I do have an update for the Mango ribbon that gets pushed out today. So for those of you who have access to the Mango ribbon, I'll be shooting you guys a message, a PM, basically telling you guys to refresh your indicator. For those of you who do not have access to the Mango ribbon, well, it's free. All you got to do is just, click the link below and let me know that you want access, and I will shoot you access to the ribbon. Yeah, so I hope you guys enjoyed this video. If you did, don't forget to smash that like button. It goes a long, long, long way for the channel. If you have any more information on the whole Genesis and Gemini debacle, let me know in the comments as well. Let everybody know in the comments as well. So, yeah, with this, guys, I will see you in the next update. Trade safely, trade stress-free, trade the Mango way, trade the easy way. Ciao, you guys.